Okay, good afternoon, ladies and gentlemen. Good afternoon. Here we are for Paul's Monday Market update, 163 for Monday, the 18th of November. I just made it to London by the skin of my teeth and stuff, so I've just been able to set up to do our short and sharper session today. As always, thanks for those of you joining us here. If you can just confirm that you can see the slides and hear my voice, that would be a great start. For those of you joining us for the first time, the Monday Market update is just that. Okay, it is a fly through the markets. Okay, for the week ahead, looking at the strength and weakness within the FX markets, along with indices, commodities. Normally, we would have a look at some charts of interest, but today that won't be happening. As I said, I've just been traveling this morning, so we'll just go straight across to the live markets. As always, you're very welcome here. Just remember that you are ultimately always responsible for your own trading decisions. This is not a signal service. It's not a trade recommendation. It is just a view of what I am looking at, which you might want to add to your own particular watch list as well. For those of you who want a little bit more, okay, in terms of more trading insight, then by all means, you can join the Togs Trading podcast. You can now find us on our own website, togspod.com. You can either use the link or use the QR link there. And normally a new podcast every Thursday. And invariably, what you can find on the website is also the video, but also the audio link. You'll also have access to Ian's Trader blog, and the recording of today's Monday Market update goes on there as well. This afternoon, you want a little bit more education. Every Monday afternoon, I run a webinar for active trades called Monday Market Matters, free to attend. Today's educational piece will be about how to trade using the highs and lows in your trading. You can either register on their website or the QR code will take you there. And you're very welcome to join me, 2:00 London time every Monday afternoon. All right. More importantly, let's dig into our own work. Okay, what we're looking at. I appreciate that if you're new to trading or if you're new to joining us, this might look maybe a little bit overwhelming or a little bit difficult to decipher. But it's not. What it is just pieces of the work I do myself every weekend, looking to identify where's the strength and where's the weakness within primarily the FX markets, but then also indices and commodities as well. By doing so, it helps me sort of focus my time, energy, and resources for the week ahead. So what is it telling us, and what can we take away for our own trading? So here we are, ladies and gentlemen. We are into week 47 of the year already, okay, for 18th of November. Where's the strength and where's the weakness? Well, those of you who've joined us, every week, I've been banging on about how kind of sterling strength was likely to be brittle and kind of likely to fall away ultimately. And that's what we started to see last week, okay? We started to see that, and you can see we've gone from having been, top of the pile for the last couple of months. Having been the top of the pile, we are now dropped down to fourth, okay, in the overall rankings. Who's replaced sterling at the top of the pile? Well, it shouldn't really be a massive shock if you've joined us in that it is the US dollar, okay? US dollar there, it's been threatening it for the last couple of weeks, and then really ever since the Trump election. It's been on a tear, and it has basically bumped its way up to the top of the pile. It's been joined there by Swiss franc. I'm kind of curious about Swiss franc, okay? You can see that it had been slipping down the polls a little bit, but it's sort of, taken a little bit of bump. I think that might have just been a little bit of a safe haven work, okay? At the end of last week, people started to get a little bit nervous about some of Trump's appointments, okay, and about what that would imply for markets. I think people got a little bit, of knee-jerk reaction. Okay, no surprise after the let's say the Trump trade in terms of its strength. It's no surprise that some people are going to get either a little bit, a little bit washed out, or a little bit nervous, or people just want to take profit. But we saw safe haven bump up towards the end of last week, certainly in Swiss franc, but also Japanese yen. Okay, if you think about that. 2 weeks ago, it was bottom of the pile. Now it's up to number 3. I think a part of that is about the sort of conversations and the comments that people are expecting from Mr. Ueda, the governor of the Bank of Japan, who's basically speaking and talking about really trying to understand what is the kind of likely trajectory of rate hikes, if at all, in Japan. And as you can probably see from the actual sort of performance since we opened yesterday, that gives you an indication of how the markets have interpreted Mr. Ueda's comments. Not exactly anything to get terribly excited about in that instance. All right, but as I said, a little bit of safe haven. Okay, a little bit of safe haven, sort of. Nudge there at the end of last week, and that's reflected, and we will see whether that continues on. When I look at the individual currencies for sterling, all of them are in sort of selling environments. Okay, apart from pound Aussie, pound Kiwi. Why would that be? Well, look where Aussie dollar and look where Kiwi dollar are. They are at the bottom of the piles, and that just kind of reinforces more that little bit of safe haven moves at the end of last week. Okay, so you're getting the safe haven currencies like Swiss and yen strengthening, and then kind of those sort of risk-on currencies, Aussie, Kiwi, sort of dropping to the bottom of the pile, and that just shows you that's the only strength for sterling at the moment against those, and that just reinforces that story about sterling strength. And we'll look at the charts of that in a moment. When I start to look at some of the indices and commodities, okay, what I've noticed is, well, you can see for yourself in terms of momentum, okay, a lot of the momentum sort of ebbed away at the end of last week. Not once again, not a massive surprise. Okay, there was always going to be people either taking profits after their Trump trades, or basically people would be getting a little bit nervous, or invariably there's just the pendulum swings one way and then it swings the other way, and so you can see that with the momentum. And in fact, there's none of them in my own STAM environment, okay, looking as bullish, okay, in terms of strategic buys. The only one is Bitcoin. Okay, no surprise there. We'll look at that chart in a moment. But, a little bit closer to home, we'll look at that when we look at sterling. I think FTSE is a tactical short, along with basically Nikkei. Oil remains strategic short. But also gold and silver, bit interesting. There's some nice price action. Well, some very nice price action if you were short. But we'll look at that in a particular moment. Okay, so there we go. That's with the STAM. That just gives us an indication of, as I said, where's the strength, where's the weakness for the week ahead. Normally, we would go into looking at a few charts of interest, but as I said, I've been traveling this morning. I just made it into London by the skin of my teeth. I'm on the hot spot here, so I don't want to basically push my luck too much. So we'll switch across to the live markets and have a look at what's going on and what we might be interested in for the coming week. So just bear with us for a moment, and we'll switch across to the live markets. Okay. All right. So I'm hoping that you can still hear me. I'm hoping you can now see the charts on one of my platforms. This is kind of indices profile that I have here. So if we just bear with me 1 minute, profile. So here we go. Dow on the weekly, NASDAQ on the weekly, SP 500 on the weekly, Russell on the weekly, FTSE on the weekly, Nikkei, DAX, oil. Okay. And why don't we do a little bit of oil start with? Listen, we talked about how, price of oil is kind of, depleting, is bearish, breaking this kind of 68 level, which we talked about there. It's also has broke that supporting trend line, closed beneath it. No surprise to see we've started this week maybe coming back up to reaction. So those who like to sort of trade using trend lines, like my friend Big Ian, who joins me on the Togs Trading podcast, not an unsurprising phenomenon if we basically get a push up, kiss the trend line goodbye before we sort of move further south. That's what we'll be looking at on oil. All right, but let's have a look at some of these American indexes, and I'm hoping you can see, those of you who join me on a week, we've been in great tears, haven't we? Great moves there. Okay, absolutely great moves. You can see that for yourself. But then last week, bosh, we started to have a little bit of a, as I said, basically take off there. Okay, especially the Russell there. You can see, no surprise really, no. Even great trends like the one we've seen for the last couple of weeks, no great trend moves in a straight line. There's always a bit of a zig and a zag. This might well be just a little bit of a zag before we sort of carry on. But, it's too early to tell on that. What we're looking at is that, we're just looking at that, how it's basically come off its highs there. We've got quite a busy data week ahead. All right. So as I said, we've had Ueda talking this morning, and it's a day for sterling. We're going to look at sterling in a moment. So we've got the monetary policy hearings tomorrow. All right. They basically crossfire with my own panel presentation at Finance Magnets. If any of you are going to that, then by all means come along, say hello, or maybe they're trying to sort of feed it out so that it won't get covered because all the media will be touching on the farmers' protest. I might be there myself, all right. But a fair bit of Canadian data. But for us here in the UK, as I said, tomorrow 10 o'clock monetary policy report hearings. Then we've got CPI numbers 7 o'clock Wednesday morning. We've got and then basically on Friday for the UK we've got retail sales and also PMIs. Right, so quite a busy UK week, but there's all the stuff coming on which we will keep an eye on there. Okay, certainly towards the end of the week, there's some interesting data coming out. But as you can see for yourself, that's what we're effectively seeing in those markets. If we go down into even a little look like Nasdaq, okay, and go down a little bit into it, you can see this is the daily chart. It's come off those highs. We're beneath the 20, and now I look at okay. The last time we were here, the 50 held as support. Will it hold again? That's what I look at. If it holds as support again, well, then it might be a great place if you're a trend trader to buy into it. But it's this interaction. I would be saying, we're between the 20 period above and the 50 below, just looking at how that basically interacts for itself. Yeah, it's sat on the 200 period more for the 4 hour. Okay, 20's crossed the 50. As I said, it wouldn't surprise me to pump ourselves up a little bit, but then we'll see how it works. Whether we're here at support and we get another move up, or whether we break a little bit lower. Okay, that's I've got I don't see anything there to give me real indication of what we do. So at this moment, so when there's not a real clear indication, I'm very happy to let the market play its hand, and then I'll follow that. I don't try and be a hero or try and predict in front, and that's generally a bit of a mug's game. All right, let's have a little look at close to home, European DAX. Interesting candle there. Okay, so the last couple of weeks we talked about last week, kind of a little bit of an inside bar, you might say a bearish pin bar. This week, or rather last week, I would look at that as I would call it a high wave candle. Okay, bit of indecision, bit of really what's going on in terms of the German economy, but also the German political situation. I think Mr. Is it Scholz and stuff? They tried to call Putin to sort of see if he could get him to sort of see a bit of sense. Mr. Putin's response was to launch a barrage of rockets and missiles against Ukraine. So you can read into that what you will, make of that, or make of the sort of the let's say the political sort of capital that Mr. Scholz and the Germans have at the moment. But it's an indication of that indecision that we're seeing there also in the DAX. People are sort of scratching their head a little bit, thinking what's going on. If I go down to the daily chart, the way I look at that here at the moment is we've been sat on the 50. And the 20 was acting as dynamic resistance, couldn't really get above it with any conviction. And now we're down beneath it. And now we're looking at the 50 and the 20. Okay. As I said, a little bit of data. Okay. Later on this week on Friday for PMIs, be interesting to see whether that is what kind of breaks the dam and we drop our way. I'd be saying down to that sort of, 4 hour 200 daily 200, sorry, at around about 18,600. That's what my scenario would be. We're making, if you look at this here, okay, keeping it nice and simple, we've had a high there, and then we're just making lower highs, and the low highs there, okay, are with there's wicks and stuff. So will that 20 act as dynamic resistance, and do we drop away over there? That's my scenario for DAX at the moment. Okay, and we'll see how that plays out this week. Japan, all right. Similar in the sense of having made a great high there on this weekly chart, we have made a series of lower highs. There's wicks coming up there, maybe see, and we're sat on that 50. See how we're sat on the 50 at the weekly 50 at the moment. Is that going to provide that dynamic support that gets us pumping our way up to the earlier years high, or once again, is this the sort of is this the line that that cracks and breaks? Is this the dam? Okay, so if I go down to the daily chart, I wouldn't exactly say the daily chart's filling me with massive glee. What I'm always intrigued in, you may have heard me say this before, is that when the price and the moving averages are all together, it's like the calm before the storm. So you've got the 20, the 200, okay, the 50, they've all come together. It's like, as I said, the calm before the storm. When you've got price and the moving averages all together like that, it's almost like trying to push sort of two north ends of magnets together. They just repel each other. And so normally what we see is, this come together before it blows out. All right. So, my view would be bearish on that. Okay. Looking at it, I wouldn't exactly say terribly bullish as a trading wise, but, we'll just have to wait and see how we come out this week on that. FTSE. Let's have a look at FTSE in a moment. Okay, when we'll have a look at that in line with the with sterling itself. Okay, so let's have a little look at the dollar, and then we might have a look at one other currency, and then we always finish on the sterling itself. Okay, so let's have a look at the dollar. As I said, I'm on the hotspot today and stuff, so it's probably take 3 weeks to update all my charts. So apologies for that, but you know it is. These ears here, look at that. Oh, finally. Here we go. This is my dollar profile. What do I have here? It's just charts all of the dollar. Aussie dollar on the weekly, Kiwi dollar, Euro dollar, dollar CAD, pound dollar, dollar Swiss, dollar yen, and the dollar index. Okay, so let's have a look at this. What we are looking at, let's have a look at dollar index. Gosh, look at that. Look at that. We just saw this turnaround, all right? End of September, off 100, big round number 100, and we've just powered our way through. And you can see the last couple of weeks post-election, that has been a proper dollar holler, hasn't it? Dollar holler. And I thought, I thought we'd get up to these points of about 106, the kind of highs of the year so far. But actually, as you can see, we're already kind of reaching for those highs of 2023. Let's just put that in. There we go. You can see, look at that. We went right up to it and we've kind of dropped our way off it. I probably need to tighten that up a little bit, but for the purposes of today, you get the gist. Okay, let's have a look at that 4 hour chart. Yeah, look at that. We're kind of like reached our way up to that. And what I'd say, I would look at that as, we're just a little bit coiling up there. Okay. You might even say as a little bit of a descending triangle at the end of an uptrend, not a true purist classical technical analysis, but people can see it's not it's not inviolable. You can see that it has been a beautiful trend there, hasn't it? So let's see what the score is today. I'm just looking at it really, in terms of specific formal US data, we're not really seeing anything major, okay, until later on this week in terms of the formal economic calendar. What this might be is I wonder whether we'll start to see reflections upon the US political situation in terms of some of Trump's picks and how they particularly play out. But either way, that is still bullish. All right, that's still bullish. You can see the 20-period moving average is acting as dynamic support, okay? My view would be as long as that continues to do so, I remain bullish. It's whether it breaks that level, then we're back down to kind of 106 area. So remain bullish, but let's just see if this squeezes, okay, before it rolls over later on in the session. With that in mind, let's have a little look at what else. Well, I said last week that basically buying dollar yen was the kind of like the simple STAM trade. All right, that's what we got last week with that. Okay, at the start of the week, you can see that's dollar strength, yen weakness that we had. But as I said, we had the start of the week really strong, and then basically, we ended this week here. Look at that. That is a daily bearish key reversal. Price pushed to a new high, rolled over, closed beneath the low of the previous candle. Okay, I always sit up and take notice when I see that. Okay, doesn't mean that the trend is over. But what I've learned over the years is when you start seeing key reversals like that, if the trend isn't over, it's not far off. Okay, so maybe we are seeing a little bit of, as I said, a little bit of dollar trimming, people taking profits. Okay, perhaps, maybe a little bit of yen strength. But as I said, I wouldn't necessarily. I'd say it's just more kind of rebalancing more so than everybody just getting joyous about the Japanese yen. If we look at that dollar story, still remember, here we go. Last week, we saw that Swiss franc has moved its way up to number 2 on the stand with dollar, the number 1. But look at that. That is still a very strong dollar candle, that, isn't it? Very strong dollar candle on the weekly chart. You can see for yourself there. Okay, Fridays was a little bit of a kind of inside bar, a little bit of a spinning top, maybe a little bit of indecision there. Okay, you might just looking at there. Okay, there's Friday's price action on the 4 hour chart, and the start of the week hasn't exactly set itself alight there, has it? With that, okay, in terms of people sort of scratching their heads a bit. Let's look at the other side of it. Okay, euro. I mean, we talked about this last week. How I thought we if we just zoom out, this is euro dollar on the weekly. I thought we would kind of work our way back down to kind of this like 105.50, 105 zone, but if I wasn't expecting it for us to move so quickly and through these, as you can see, these kind of levels of support from earlier this year. We really just have kind of collapsed our way down towards that kind of 105.30, 105.50 area. Daily chart. I mean, just look at that. that is just euro weakness, dollar strength. All right. Euro's at number 6 on the STAM, dollar's at number 1. But this is the way I look to trade. Okay. I want to buy strength and sell weakness. That's I don't want to fight the market. I basically I look at it in terms of I want to surf the market. I want to surf, the best waves. You can't surf every wave. You're looking to try and surf the best waves. And for me, my belief is in those FX markets, in those major pairs, I want to basically buy strength and sell weakness, and that's where you want to get a piece of that. Okay, those are the scores on the doors, and you can see it there yourself. All right, Aussie weakness, dollar strength. Okay, Kiwi weakness, dollar strength. Okay, remember what I was saying. Aussie and Kiwi are at the bottom of the pile. US dollars at the top of the pile, and the price action's confirming it beneath its averages. It's making lower lows, lower highs. Why would you fight that? Okay, why would you fight that? I see far too many new traders trying to be smart asses, okay, and trying to, basically project onto the market what they want to happen rather than actually just say, bang, there's a nice wave. Why don't you just try and surf that? Okay, get with the program. So there we go. There's the dollar. Let's just go to the sterling, shall we? Okay. What have we got here? Yeah, let's go to sterling. And why don't we start with FTSE here? This is a sterling profile. So I've got cable, pound yen, euro pound, pound Swiss, pound Aussie, pound Canadian, pound Kiwi, and FTSE. Why don't we have a little look at the FTSE itself? Then let's start off with that. So I haven't talked as much about this as the others, mainly because it's been pretty dull. Those of you who have joined us, you've heard me talking about basically we were just kind of pretty much in a range there, and nothing really was going to happen until Rachel Reeves' budget. And Rachel Reeves' budget was as well received as her CV seems to have been well received in the social media over the weekend. But I'll leave you there to do your own digging there. But you can see the score. You can see the scores on the doors there. Okay, that her budget was not well received. We've seen FTSE dropping. Okay, last week, we've printed a bit of an indecision candle, a high wave candle there. I'd say, an indecision candle sat up at the 50. Okay, and that's what we're looking for. Is the 50 gonna save the FTSE? Okay, is the 50 gonna save the FTSE? So, there will be data out that will, show us one way or t'other. But I also think personally that there is a good deal of sentiment and involved, and so we have seen over the weekend, let's say certain, rumours, and they are just that about Mr. Starmer, Miss Reeves, etc. All of which just basically they just chip away at what little confidence the sort of people had in them. I think tomorrow's supposed to have a farmers' protest. I'm going to go and try and join it myself if I can. I don't mind ever walking. I'm Irish farming family and stuff, farming Ireland. So I'm very happy to support farmers. Okay, and I just wonder whether this all starts to weigh as well. Okay, and I think if the 50 breaks, well then we're going to 8,000. Okay, we just dipped beneath it a bit last week. We're going to 8,000, and then once you've gone past 8,000, well, you're into these gaps here around about 77.50. Okay, 77.50 to 78.50. That's what we look at. Okay, and that would be a reflection of a lack of enthusiasm for UK stocks in a sort of in a Trump world. And that was one of the things I said a couple of weeks ago after the election. It really was a simple case of you long the US, short the UK. If you look at the FX, okay, cable, all right, look at that drop last week we talked about. I've been saying it was coming. We could see it was sterling was it was floating high on vapor, and basically the rug's being pulled, and you can see for yourself. Look at that from where we were. Okay, just a while back here, we were up, pushing up 131, all right, just in front of the election. Okay, 130.70, 131. And now look at us, 126.25. Look at that. That is a many hundred pips move there. Okay, and you can see for yourself. Bosh, look at that. Look at that. This was the election. Nice big bearish key reversal. You might even say a bit of an evening star, and we can see that it's just dropped its way down there, hasn't it? Look at that. That is, once again, that is sterling coming off the highs. Okay, once you're at the top, the only way is down, whereas the dollar is hammering its way to the top of the pile, and that's reflected there. Why would I want to fight that? If I look at others, good trade from last week. We talked about on sort of stage one, stage two was that we had an inside bar pin bar on the weekly chart on pound yen, expecting it to drift its way down, and that's what we saw. Okay, was it was kind of a bit of a stop go week. A nice short. Okay, not long after this. Okay, just a short there, and then the end of the week, it really did topple that kind of real risk off sentiment came in at the start of the week, and it's no surprise we've had a bit of reaction to that, but ultimately still doesn't look great. Pound against Swiss franc. This one has bamboozled me. I was talking about how I thought we might get this would be a kind of a risk on, risk off trade. Okay, if everyone was happy, we would get risk on and pound Swiss would rise. If we didn't, we would see Swiss strengthen. And whilst sterling has weakened and Swiss franc has strengthened, the last couple of weeks it has bounced back and forth a bit. Last week, we've closed beneath the 50, which we haven't done for a month or so. My view would still be that sterling is weakening, Swiss franc might strengthen, and so it wouldn't be a great trend, but it would not surprise me if we drifted back down to this sort of 111 area, which has been significant for the last couple of years on that with pound Swiss. Looking at here, as I said, the pound against the Aussie. Remember, Aussie and Kiwi are bottom of the STAM pile, but price action not pretty, drifting its way down there. Okay, just holding on, even against pound against New Zealand dollar. Some people would be looking at that as a bit of a bullish flag, and I wouldn't fight you on that. I'll just be looking at it. It's not the price action. It's not exactly the most. It's not the most clean. It's not the most pretty. We look at Canadian dollar. Pound against Canadian dollar weekly chart has been a fabulous run up there. Okay, fabulous run. And we went into this pivoting around the big round number at 180, pivoting there, rolling where you can see last week we sold off. This is basically sterling weakening. Now, we printed a nice pin bar there, okay, at last month's lows, but we'd be looking at them there. You can see it on the 4-hour chart, turns into a really kind of a morning star. Is the support there at around about 177.50? You might say so, okay. You might say so, but the thing that kind of interests me is most of those big candles are bearish candles. Apart from this one, I might be just watching this. Okay, we've got quite a bit of sterling data out, quite a bit of Canadian data out this week. This could just go sideways until we get some clarity, okay, on those two economies. So there you go, ladies and gentlemen. Let's draw it to a close there, shall we? Okay. So as I said, I hope that has given you a little bit of help, a little bit of insight. Okay. Thanks for joining us. I hope there wasn't too much jitter doing it on the hotspot. As I said, it's going to be an interesting week for sterling. Okay, see what that news does. Whether that news basically breaks the dam and we see further weakness, or whether it holds up and supports it at this moment. If you are at Finance Magnets tomorrow morning, I'm on a panel there. By all means, come up, say hello and stuff. Great to always meet people and see. For the rest of you, just a reminder, there's no stage one call tonight. There's no stage two call tomorrow, but we'll be back next week. I hope you all have a fabulous trading week, ladies and gentlemen. Okay, best of luck with your own trading endeavors, and I'll speak to you soon. Many thanks. Cheers.